In America, millions of people wake up before sunrise every single day believing that if they just work hard enough, someday life will finally become easier. They spend decades chasing stability, decades chasing security, decades believing retirement is waiting for them at the finish line like some kind of reward for surviving the struggle. But for millions of ordinary Americans, that moment never comes. At 55, 60, sometimes even 70 years old, they still wake up to alarm clocks they no longer have the energy to answer. They still stare at bills spread across kitchen tables late at night while pretending everything is okay. And perhaps the most painful part of it all is that many of them did everything they were told to do. They worked hard. They saved money. They avoided unnecessary risks. Yet somehow the system still left them behind. A woman named Linda understood this feeling better than most people. At 58 years old, she sat alone one Thursday night in a small apartment outside Chicago staring at her banking app in complete silence. Her reading glasses rested low on her nose while the glow from her phone reflected in her tired eyes. The numbers on the screen barely moved anymore. Her rent had increased again. Groceries cost more than they did just 2 years earlier. Gas prices kept rising. Even her medical bills had become harder to manage. For over 30 years, Carol worked as a medical receptionist. She never missed shifts. She picked up overtime whenever she could. She skipped vacations. She sacrificed constantly. Yet in that quiet moment sitting alone at her kitchen table, she realized something terrifying. Retirement was no longer a dream. It was becoming impossible. And Linda was not alone. Across America, millions of women quietly carry the same fear every single day. They smile in public. They go to work. They take care of families. They pretend everything is under control. But privately, many are exhausted. Financial pressure follows them everywhere. The fear of outliving their savings keeps them awake at night. Some secretly wonder if they will work until the day they die. Others avoid checking their bank accounts entirely because the anxiety has become too overwhelming. And while this was happening, another group of Americans was quietly playing by completely different rules. Because hidden behind the noise of Wall Street, behind the chaos of financial news, behind the terrifying headlines about recessions and inflation, there existed a system quietly generating wealth for ordinary people every single day. Teachers, nurses, divorced mothers, retired couples, people who were never born rich, people who never won lotteries, people who once struggled financially just like everyone else. Somehow money kept flowing into their lives, even while they slept, even during vacations, even during economic crashes that terrified the rest of the country. And the strange part was most Americans looked directly at this system their entire lives without truly understanding it. The stock market. For many people, those words immediately trigger fear. They imagine rich men screaming on trading floors. They imagine people losing life savings overnight. They imagine gambling, risk, chaos. But what if the real danger was never investing at all? What if the greatest financial risk wasn't losing money in the market, but spending 40 years working without allowing your money to work for you? That question haunted Linda, because just 3 years earlier, another woman named Sarah had been sitting in almost the exact same position. Same fears, same uncertainty, same exhaustion. Sarah had spent most of her adult life believing investing was only for wealthy people. She grew up hearing stories about stock market crashes and financial disasters. Her parents distrusted Wall Street completely, so she kept all her savings in the safest place she knew, a traditional bank account. And for years she felt responsible for doing that. Safe, careful, disciplined. But slowly, something began changing around her. Everywhere Sarah looked, life became more expensive. Rent increased. Food prices climbed higher. Insurance costs exploded. Meanwhile, the money sitting in her savings account barely grew at all. She was technically saving money, but somehow falling behind at the same time. That contradiction confused her for years until one evening she stumbled across an interview with an elderly investor explaining how ordinary Americans quietly build wealth through ownership instead of labor. Ownership. That single word changed everything. For the first time in her life, Sarah began understanding something school had never taught her. Wealthy people were not simply working harder. Many had built systems where their money produced more money. They owned shares in businesses. They owned assets that grew over time. And while millions of Americans traded hours for dollars every single day, investors quietly collected growth, dividends, and long-term wealth from companies powering the entire economy. At first, Sarah resisted the idea completely. It sounded too complicated, too dangerous, too unrealistic for someone like her. But curiosity slowly replaced fear. Night after night, she began researching the American stock market. She learned how companies like Apple, Microsoft, and Amazon had quietly rewarded long-term investors for decades. She learned how some people invested small amounts consistently over many years and eventually built portfolios generating passive income large enough to support retirement. She discovered that many ordinary Americans were becoming financially stronger not because they earned massive salaries, but because they started investing earlier than everyone else. And then came the realization that shook her deeply. Time mattered more than perfection. Not intelligence. Not luck. Not being born rich. Time. Because every year spent waiting was another year compounding could no longer help her. Every delayed decision carried a hidden cost most people never saw until decades later. And suddenly, Sarah began noticing something painful all around her. Many people spent years researching investments, watching videos, promising themselves they would start soon. But soon became months. Months became years. And eventually, life moved faster than their financial plans ever did. Meanwhile, the market kept moving forward without them. Before we dive deeper, let us know in the comments where you're watching from. We'd love to hear from you. And don't forget to hit that subscribe button so you never miss any of our upcoming videos. What happened next completely changed the way Sarah viewed money forever. Because during one of the most frightening market crashes in recent history, while millions of Americans panicked and sold everything, she noticed wealthy investors doing something completely different. Something that seemed almost unbelievable at the time. While fear spread across the country, they were buying. For decades, Wall Street looked like a place ordinary people were never supposed to understand. The language felt confusing. The numbers moved too fast. Financial news channels spoke with urgency every single day, as if disaster was always just around the corner. And for people like Linda, that fear became deeply personal. Every time she heard words like market crash or recession, her stomach tightened instantly. She remembered the panic from 2008. She remembered neighbors losing homes. She remembered coworkers speaking about retirement accounts collapsing almost overnight. To Linda, the stock market did not represent opportunity. It represented danger, uncertainty, stress. So like millions of Americans, she stayed away from it completely. And that decision felt responsible at first. After all, Linda was not reckless with money. She avoided debt whenever possible. She worked overtime shifts. She tried to save consistently. But despite all her discipline, something strange kept happening. The harder she worked, the more expensive life became. Groceries rose in price. Electricity bills climbed higher. Insurance premiums increased year after year. Even simple things like coffee, gas, and rent slowly became heavier financial burdens. Meanwhile, the money sitting safely inside her savings account barely changed at all. And deep down, Linda began sensing something she could no longer ignore. Working harder alone was no longer enough. Sarah had started noticing the same thing years earlier. First, she ignored it. Like many Americans, she assumed wealthy investors possessed secret knowledge regular people could never understand. She imagined Wall Street insiders sitting inside expensive offices predicting the future, while ordinary people remained locked out of the system entirely. But the more she researched, the more unsettling the truth became. Many successful long-term investors were not financial geniuses at all. In fact, some of the wealthiest investors in America followed surprisingly simple strategies for decades. They invested consistently. They stayed patient during panic. And most importantly, they understood something most beginners completely misunderstood about the stock market. Fear changes behavior. When markets rise, people become excited. They feel confident. Headlines celebrate new wealth. Social media fills with stories about fast money and overnight success. But when markets fall, everything changes. News anchors speak with panic in their voices. Financial experts warn about uncertainty. Families begin checking retirement accounts obsessively. Suddenly, fear spreads across the country faster than facts ever could. And during those moments, millions of ordinary investors make the exact same emotional decision. They run. But something about that never made sense to Sarah. Because every time fear reached its highest point, experienced investors seemed unusually calm. Sometimes they even smiled during economic panic. While others rushed to sell investments, these investors quietly bought more. During recessions, they bought. During crashes, they bought. During terrifying headlines warning about economic collapse, they continued investing anyway. To Sarah, that behavior almost seemed irrational at first. Why would anyone buy during chaos? Why would wealthy investors move toward fear while everyone else moved away from it? That question stayed in her mind for months. Meanwhile, Linda continued living the same exhausting cycle every day. Wake up early. Go to work. Pay bills. Repeat. Yet despite decades of effort, financial freedom still felt painfully far away. One night after work, she sat in silence scrolling through online comments from people discussing retirement. Some were terrified. Others admitted they had almost no savings at all. But then Linda noticed another group entirely. Ordinary Americans speaking calmly about dividends, index funds, long-term investing, passive income. Some described receiving monthly payments from investments they had owned for years. Others explained how market crashes actually became opportunities instead of disasters. Reading those comments felt almost unreal to her. It sounded like two completely different versions of America existed at the same time. One trapped in constant financial pressure, another quietly building wealth in the background. And somewhere between those two worlds, the truth about Wall Street was hiding. Because what beginners misunderstood was not just how the stock market worked. It was how human psychology worked. Fear had convinced millions of Americans to avoid the very system capable of helping them build long-term wealth. The same headlines terrifying ordinary people often created opportunities for experienced investors. And the deeper Sarah researched financial history, the more she realized this pattern had repeated itself over and over again for generations. Market crashes came and went. Recessions came and went. Panic came and went. But somehow long-term investors who stayed patient often emerged stronger than before. And to understand why that kept happening, Sarah had to go back to one of the darkest moments in American financial history. A moment so devastating it permanently changed how millions of people viewed the stock market forever. Linda's life looked exactly like what most people would call responsible. At 57, she had spent her entire adult life working hard, paying bills on time, and avoiding anything that felt uncertain with money. She believed safety came from discipline, from saving, from staying away from anything she did not fully understand. Every paycheck she earned went through the same routine. A portion to rent, a portion to groceries, a portion carefully placed into her savings account. It felt stable, predictable, controlled. But over time, something began to shift quietly in the background of her life. Every trip to the grocery store felt heavier than the last. Prices that once felt normal slowly became uncomfortable. A simple cart of food now cost noticeably more than it did just a few years earlier. At work, Linda noticed coworkers quietly talking about how far their paychecks no longer stretched. Retirement calculators she occasionally glanced at online began showing numbers that made her uneasy. The more she worked, the more she saved, the further retirement seemed to move away instead of closer. Still, Linda held on to what she believed was the safest choice. The stock market. To her, it was unpredictable. A place where people lost money. A place she had seen in news headlines during crashes and financial panic. So she stayed away completely. Instead, she doubled down on what she trusted. Work more. Save more. Avoid risk. Hope for the best. But hope slowly began to feel less like a strategy and more like uncertainty she could not escape. Meanwhile, Sarah was living a nearly identical life. Same age range. Similar background. Similar responsibilities. She also worked hard. She also avoided unnecessary risk. And she also believed investing was something other people did. Not people like her. For years, Sarah followed the same pattern Linda did without realizing it. Earn. Spend carefully. Save what is left. Repeat. But one night changed the direction of everything. Sarah was sitting alone after a long day when she saw yet another headline about retirement struggles in America. Stories of people reaching their 60s with not enough savings. Stories of people still working part-time jobs they never imagined doing at that age. It unsettled her in a way she could not ignore. Not because she was reckless, but because for the first time she started questioning whether the traditional path she trusted was actually enough anymore. That night, instead of brushing the thought away like she normally would, Sarah did something different. She started researching. Slowly at first. Carefully. Hesitantly. She learned that owning parts of companies meant something very different from what she had always assumed. She discovered that when people buy stocks, they are not gambling on random price movements. They are becoming partial owners of real businesses that produce real products, earn real profits, and grow over time. Companies like Apple, Microsoft, and Amazon were not abstract financial concepts. They were actual businesses shaping everyday life, and investors could share in that growth simply by owning small pieces of them. The idea confused her at first because it felt too simple. But the more she learned, the more a different picture of the financial world began forming in her mind. A world where wealth was not only built through higher salaries, but through ownership. A world where patient investing allowed ordinary people to participate in the success of the biggest companies in America. And slowly, Sarah began understanding something she had never been taught before. The stock market was not just movement and numbers. It was ownership. And ownership changed everything. Still, she was careful. She did not rush. She did not gamble. Instead, she started small. Very small. Just enough to learn. Just enough to begin. While Linda continued relying entirely on savings, Sarah quietly took her first steps into a system she once feared. At first, nothing dramatic happened. No sudden wealth. No life-changing moment. No instant transformation. But something more important was beginning to form underneath the surface. While Linda's money remained static, Sarah's small investments started connecting her to something larger than her monthly paycheck. Over time, she began noticing how companies she owned continued to grow, even while she focused on her daily life. Slowly, she started to see how patience played a role in investing that fear had previously hidden from her. The difference between them was not effort. It was direction. And that is where the most important truth about investing begins to emerge. The stock market is simpler than most people think. When you buy a stock, you buy a tiny piece of a real company. And when those businesses grow, your money can grow too. But just as Sarah was beginning to understand this new perspective, she discovered something that changed the way she viewed investing completely. Something that explained why so many beginners never experience this kind of growth even when they try. A single mistake that quietly destroys millions of financial opportunities every year, without most people even realizing it is happening. Linda thought investing was something distant, something for people on television shouting about numbers she never understood. But after Sarah began learning, a deeper truth slowly started to surface, one neither of them had ever been taught in school or at work. Because the American stock market was not just a place where money moved up and down. It was a system shaped by human emotion, fear, and patience. And nothing revealed that more clearly than moments of crisis. Every stock market crash creates two types of people. Type 1 are the people who panic and sell. The moment they see their money drop, they rush to escape. They lock in losses because fear feels urgent in the moment. This was Linda's natural instinct. It was the instinct of millions of Americans who had been trained to believe safety meant stepping away when things looked uncertain. To them, falling prices meant danger, not opportunity. But there is another group. Type 2 are the people who quietly buy while everyone else is afraid. They do not react to panic. They observe it. They understand that fear in the market often creates temporary distortion, not permanent destruction. During the 2008 financial crisis, while headlines warned of collapse, some long-term investors were doing something almost unthinkable. They were buying more. During the COVID market crash, while the world slowed down and uncertainty spread everywhere, the same pattern repeated itself. Fear rose, and experienced investors stayed calm. History shows something fascinating. The second group often becomes dramatically wealthier over time, not because they predict the future perfectly, but because they understand something most people overlook in moments of fear. Markets recover. Businesses adapt. Time continues forward even when panic feels permanent in the moment. And those who remain patient often find themselves positioned for growth when confidence eventually returns. This is where Sarah began to see investing differently from Linda. Because Sarah initially assumed investing success came from perfect timing, buying at the exact lowest point, selling at the perfect peak. But as she studied further, she realized something more powerful was happening underneath all of it. Wealth was not being built through perfect decisions. It was being built through consistency over long periods of time. And at the center of that consistency was something most beginners never truly understand until it is too late. Compounding. The idea sounds simple at first, almost too simple to matter. But its effect over time is what quietly separates those who grow financially from those who remain stuck. Sarah first saw it explained through a simple equation, one that appeared in almost every serious investing lesson she studied. A tongue sticking out, 1 circled M plus R slash N caret NT, PV, R, percent, N, 2468101214161820500100150020002500$2 $653.306.9 1400.0. At first glance it looked like just another formula. But behind it was a principle that reshaped everything Sarah thought she knew about money. Because this equation was not just about numbers. It was about time working together with patience. It was about returns building on top of previous returns. It was about growth stacking itself repeatedly in a way that becomes more powerful the longer it is allowed to continue. This equation quietly changed millions of lives. Not overnight, but slowly, patiently, relentlessly. Sarah began to understand that the real power was not in making large amounts of money at once, but in allowing small amounts to grow repeatedly without interruption. Even modest investments, when given enough time, could transform into something far larger than most people initially expect. Not because the process is fast, but because it is consistent. And this was the part Linda had never been exposed to. She believed saving alone was enough. She believed avoiding risk was enough. But what she never realized was that avoiding the market entirely meant avoiding one of the most powerful growth systems in the modern economy. While her savings stayed nearly the same year after year, inflation slowly reduced what that money could actually buy. Meanwhile, Sarah's small, steady investments were beginning to connect her to something Linda could not yet see. The most underestimated force in wealth building is not intelligence or luck. It is time. Because over time, even small investments begin to grow in ways that feel almost invisible at first. And that is exactly why so many people fail to notice the opportunity while they still have the chance to act on it. They assume nothing is happening because change feels slow in the beginning. But underneath that stillness, compounding is quietly building momentum. Most people underestimate how powerful small investments become over time. Because they expect results quickly. They expect movement they can immediately see. And when they do not see dramatic change, they assume nothing is working and stop too early. But Sarah was beginning to learn something different. She was beginning to see that the real transformation in investing does not happen in weeks or even months. It happens over years of consistency that most people never stay committed to long enough to witness. But if investing is so powerful, why do most beginners still fail? By the time Sarah started seeing small changes in her investing journey, she also began noticing something uncomfortable about the world around her. Everywhere she looked online, money had become entertainment. Short clips promising fast wealth. Screens filled with people showing luxury lifestyles built in days. Comment sections filled with advice that changed every hour depending on what stock was trending that week. It all felt exciting at first. Almost convincing. But the more she watched, the more something felt off. Because most people don't lose money because investing is impossible. They lose because emotions take control. And once Sarah understood that, everything she had seen online started to make more sense. Fear was the first force that quietly destroys progress. Fear convinces people to wait forever. Tells them the timing is not right. That they should learn a little more. Save a little more. Watch a few more videos before starting. Linda lived inside this stage for years without realizing it. Every time she considered investing, fear whispered that she might make a mistake. So she delayed. And every delay felt safe in the moment but expensive over time. Then comes greed. Greed convinces people to chase fast money. Sarah saw this everywhere online. People jumping into trending stocks. People reacting emotionally to headlines. People believing they had finally found the shortcut to wealth. First it looks exciting, even motivating. But behind the excitement is instability, because chasing fast money often leads people to abandon patience completely. And without patience, investing becomes something very different from what Linda and Sarah were beginning to understand. And then there is panic. And panic destroys patience. This was the force that showed itself most clearly during every market crash Sarah studied. When prices dropped sharply, people did not think long-term. They reacted emotionally. They sold investments at the worst possible time. They locked in losses not because the system failed them but because emotion took control in the moment. Linda recognized this feeling immediately. It was the same feeling she had every time financial news turned negative. A sense of urgency. A need to escape. A belief that stepping away meant safety. But what Sarah began learning was that the people who built long-term wealth were not the ones who avoided fear. They were the ones who understood how to move through it without reacting emotionally. And that is where another major shift in understanding began to appear. Because instead of trying to predict individual companies or chase perfect opportunities, experienced investors often did something far simpler. They removed emotion from the decision entirely by investing in entire sections of the market at once. Instead of gambling on one company, many successful investors buy the entire market. Sarah first encountered this idea when studying index investing. It sounded almost too basic at first. Instead of choosing winners and losers, investors could simply track the overall performance of the economy itself. One of the most common examples she came across was the S&P 500, a collection of hundreds of major American companies working together as a single measurement of long-term market growth. She learned that diversification was not about eliminating risk completely. It was about reducing the impact of any single failure by spreading investments across many companies instead of relying on just one. If one company struggled, others continue growing. It created a more stable long-term path compared to trying to predict individual outcomes. And for Linda, this idea would have sounded unfamiliar, even unnecessary at first. She had always believed investing required selecting the right company at the right time. But Sarah was beginning to understand something different. Something more grounded. Something more realistic for ordinary people who did not spend their days studying markets. Lower stress investing was not about being perfect. It was about being consistent. But just as Sarah thought she was beginning to understand the full picture of investing, she came across a realization that changed everything she thought she knew about wealth, time, and opportunity. A discovery that completely shifted the way ordinary people could approach financial freedom, and one that explained why so many never reach it, even when the tools are available to them. By the time Sarah reached this stage of understanding, something inside her perception of money had permanently shifted. What once felt confusing and intimidating was now beginning to feel structured, logical, and strangely simple. She was no longer looking at the stock market as a chaotic place of uncertainty. She was starting to see it as a system of ownership, patience, and long-term participation in the growth of real businesses. And then she discovered something that changed everything even further. Some companies don't just grow your money, they actually pay you for owning them. At first, Sarah did not fully believe it. It sounded almost too straightforward to be real. But as she continued learning, she found consistent evidence of it across many well-established companies. These payments were not random. They were structured, predictable, and tied directly to ownership. This is called a dividend. And once she understood it, the entire idea of passive income began to take on a completely new meaning. Because dividends were not about trading time for money. They were about ownership generating income over time regardless of daily effort. Companies shared portions of their profits with the people who owned them. And for long-term investors, those payments could continue repeatedly as long as ownership remained. Then Sarah began imagining something she had never seriously considered before. Imagine waking up and seeing money deposited into your account without clocking into work. No shift, no boss, no schedule, no hourly requirement. Just ownership working quietly in the background. That idea felt almost unreal to her at first because it contradicted everything she had been taught about earning money. For most of her life, income had always been tied directly to effort. Hours worked, tasks completed, time exchanged. But dividends introduced a different structure entirely. And as she learned more, she discovered that many investors did not simply take these payments and spend them immediately. They reinvested them, allowing each payment to buy more shares, which then produced even more payments over time. A cycle that gradually increased in size, slowly building momentum year after year. Cash flow began to look less like a straight line, and more like a system that grows on itself. And this is where everything Sarah had been learning connected back to the earlier truth she struggled to understand. Compounding was not just about price growth. It also applied to income itself. When dividends were reinvested, they created a snowball effect. A structure where small beginnings could gradually turn into something far larger than expected, simply through time and consistency. But the most emotional part of this realization was not technical. It was human. Because for millions of women approaching retirement in America, passive income means something deeper than numbers on a screen. It represents stability in a period of life where uncertainty often becomes louder. It represents relief after decades of work. It represents the possibility of choosing how to live each day instead of being controlled by financial pressure. It means security, freedom, peace. And as Sarah continued reflecting on everything she had learned, she could no longer ignore the contrast between two lives unfolding at the same time. On one side, Linda was still carrying the weight of financial anxiety, relying entirely on work and savings, hoping nothing unexpected would disrupt her fragile sense of stability. On the other side, Sarah was slowly building something different. Something that did not depend entirely on time worked, but on assets owned and allowed to grow. The difference between them was no longer just knowledge. It was direction. And as that realization settled in, Sarah finally understood the truth that had been hidden in plain sight all along. The biggest advantage wasn't being rich. It was starting before most people do. Years passed quietly. Not overnight transformation or sudden moment where everything instantly changed. The real shift happened the same way most important things in life happen. Slowly enough that most people fail to notice it while it is happening. Linda still worked hard. She still woke up early. She still carried the habits she believed would eventually protect her future. But now, at this stage of her life, exhaustion had started settling deeper into her routine. Work no longer felt temporary. It felt permanent. Retirement was something she still talked about occasionally, but the confidence behind the idea had faded. Rising costs continued pressuring her finances from every direction. And because her income still depended entirely on labor, every unexpected expense felt heavier than it once did. Meanwhile, Sarah's life had not become perfect. She still worried sometimes. She still watched markets fluctuate. She still experienced moments of uncertainty during economic downturns. But beneath all of that uncertainty, something fundamental had changed. She no longer felt trapped in the same way Linda did. Because while Linda relied almost entirely on work to sustain her future, Sarah had slowly built systems of ownership working alongside her effort. And over time, those systems became stronger. The dividend payments that once seemed insignificant had gradually grown larger. The investments she once feared had become familiar. What started as small contributions years earlier had quietly developed momentum through consistency and time. And perhaps the most emotional part of all was this. Sarah no longer felt completely alone against the future. Because for the first time in her life, her money was beginning to contribute alongside her labor instead of sitting still while inflation slowly reduced its value year after year. Two women. Same economy. Same country. Two completely different futures. And the difference between them was not luck. It was not privilege. It was not some hidden secret available only to wealthy people. It was understanding one simple truth early enough for time to do its work. Because the stock market does not reward perfection. It rewards patience, consistency, and time. That truth is difficult for many people to accept because modern culture trains people to expect speed, fast success, fast results, immediate change. But the most powerful financial systems in the world rarely move that way. They grow quietly beneath the surface while most people are distracted by short-term fear and noise. And that is why so many people reach their later years carrying regret they never expected. Not because they failed, but because they waited. They waited for confidence before starting. They waited for the perfect moment. They waited until they earned more money. They waited until fear disappeared. And by the time they realized time itself was the most valuable asset they had, years had already passed. Sarah understood that now more than ever. Because looking back, the most important decision she ever made was not choosing the perfect investment. It was deciding to begin before she felt fully ready. That small decision changed the entire direction of her future slowly, quietly, and steadily over time. And perhaps that is the most important lesson hidden inside this story. The gap between financial stress and financial freedom is often created by small decisions repeated consistently for years. Decisions that feel insignificant in the beginning. Decisions most people postpone because they underestimate how powerful time can become when paired with patience. Linda believed safety came from avoiding risk completely. Sarah eventually learned that the greater risk was standing still for too long. And now, after everything you've heard, there is only one question left. 10 years from now, will you wish you started today? And maybe that is why stories like Linda's and Sarah's resonate so deeply with millions of Americans watching quietly from home tonight. Because for many people, this is not just about investing. It is about fear. It is about uncertainty. It is about reaching a stage in life where financial pressure begins to feel heavier than it once did, and wondering whether there is still enough time left to change direction. Some people watching this may see themselves in Linda. Hardworking, responsible, careful with money, yet still feeling like financial freedom keeps moving further away no matter how hard they try. Others may relate more to Sarah. Curious, uncertain, but slowly beginning to realize that small decisions made consistently over time can completely reshape the future. And perhaps the most important part of all this is understanding that neither of these women were financial experts when their journeys began. They were ordinary Americans trying to make sense of a system nobody had properly explained to them before. One stayed frozen by fear for too long. The other eventually decided to start before she felt fully ready. That single difference changed everything. Because the truth is, most people never completely eliminate fear when it comes to investing. Even experienced investors feel uncertainty during market crashes and economic downturns. The difference is that they no longer allow emotion to control every financial decision they make. They understand that wealth is often built quietly through patience, while the rest of the world is distracted by panic and short-term noise. And now the question shifts toward you. What's the biggest thing stopping you from investing? Fear, confusion, or simply not knowing where to begin? Comment below because these conversations matter more than most people realize. Millions of Americans are facing the exact same fears in silence, believing they are alone in their uncertainty when they are not. Sometimes the first step toward changing your financial future begins with simply admitting where you currently stand. And if this story made you think differently about money, ownership, and long-term investing, subscribe to Emma Invest so you never miss the next chapter in this journey toward financial freedom. Because if you thought the stock market was powerful, wait until you discover the hidden asset wealthy Americans quietly buy during recessions while everyone else is distracted by fear.